Auto margins are expected to come down. They were 19.5% in the first quarter. Most are saying they're going to come down 1% or 2% in the second quarter. At least that's the conjecture that's out there among analysts. And that's because of the price cuts. But the biggest impact with those price cuts, Eamon, it's China. It's brutally competitive in China right now in terms of pricing. That's the biggest impact for Tesla.
And they just
Not
put
as
a
much
floor
here in the United States, but though we are seeing some.
And they just put a floor on prices
again?
in China, right? The government teamed up with the Chinese automakers and said no more price cuts.
Supposedly.
Supposedly.
You know how this works, Eamon. There's supposed to be a floor there, and then we hear there's reports a day later that some of the companies are juicing the market a little bit.
We'll see.
I'm always a little bit skeptical of these agreements.
Tesla, being a pioneer and market leader in the EV industry, is well positioned to experience remarkable growth. The company's expanding global footprint plays a significant role in its projected growth. But while Tesla continues to expand production, there is a critical need to do so in a cost-effective way. That's why in today's video, we're going to explore the ways Tesla plans to halve its production costs and speed up the time it takes to build a new car. This comes as the automaker plans to launch more affordable models in the future, something that will be totally remarkable for this leading automaker. So join us as we explore significant ways that Tesla can make this happen. Let's get started.
April, the Environmental Protection Agency proposed a rule intended to significantly curtail carbon emissions. If adopted, it would require that electric vehicles make up 60% of all new vehicles sold by 2030 and 67% by 2032. It was a significant escalation from the Biden administration's previous goal of 50% electric vehicles by 2030. Now, Tesla's 4% plus better than expected 2Q deliveries in combination with global pricing trends, which appear to have roughly stabilized since declining sharply in the first quarter, paint a bit better picture of demand for Tesla vehicles than was the case at the time of first quarter earnings in April, and as such, JP Morgan modestly increased earnings estimates, even though they rate the stock underweight. Analysts are concerned about valuation, and although both technology and execution risk seem substantially less than was once feared, JP Morgan believes that expansion into higher volume segments with lower price points seems fraught with greater risk relative to demand, execution, and competitions. Now, risks to that thesis include the demand for Tesla vehicles could rise materially, gasoline prices could increase, we know OPEC's doing cuts, or government penalties and regulations on rival internal combustion engine vehicles could increase as well, which could drive adoption toward electric vehicles benefiting Tesla. And finally, better than expected execution on operating targets. That's the risk to that underweight thesis.
In recent years, there has been significant surges in interest and demand for electric vehicles worldwide. The growing trend can be attributed to several key factors that have sparked a shift towards sustainable transportation. While governments across the globe are recognizing the urgent need to reduce carbon emissions, they are also implementing policies and incentives to encourage the adoption of EVs. Hey guys, welcome back to Tesla Tomorrow. According to Tesla's stock price and analysis, the expert Ross Gerber has been taking a look at all of these figures, and he says that investing in electric vehicles, and specifically Tesla, could potentially be the most important investment scheme of the next decade. As a renowned Tesla bull, Gerber has a strong track record in predicting the market trends and has identified the EV theme as one of his major focuses in the coming years. The switch to electric cars is happening at a rather fast rate, and individuals as well as countries around the world are beginning to see the undeniable benefits of transitioning to clean energy. With Tesla leading the charge in the electric vehicle revolution, it's no surprise that their growth prospects are generating significant excitement in the investing industry. And by also reducing cost, this growth will be happening at an unprecedented rate. As Elon Musk once said, the desire for people to own a Tesla is extremely high. However, the limiting factor is their ability to pay for a Tesla. So why will Tesla make its cars more affordable? And why will this be a big deal for the automaker? Keep watching as we bring you all the details. But before we get on with it, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla's recent Investor Day, its CEO Elon Musk told shareholders that Tesla expects to cut manufacturing costs in half, partially through an updated set of manufacturing processes and through its next-generation vehicle platform planned for production at its Gigafactory in Mexico. That scale of production is expected to help Tesla unlock vehicles with sub-$30,000 sticker prices, comparable to a traditional gas car such as a Toyota Corolla. Additionally, this is also thought to help increase mainstream electric vehicle adoption, as more and more consumers are able to afford and update pricing models. According to Tesla's Vice President of Vehicle Engineering, Lars Maravi, higher volumes of auto production mean lower manufacturing costs. The Tesla executive planned this while emphasizing how crucial manufacturing, as well as a new generation EV platform, would be to the company's ability to deliver on long-term production targets. If Tesla is able to produce cars at a lower cost, imagine how many cars the company will be producing and how much sales it could make. It will be totally groundbreaking. There is also a massive shift to EVs, and one of the driving factors behind this increased interest in electric vehicles is the fluctuating oil prices. Oil prices have become increasingly volatile in recent years, and there's a high chance that they will continue to rise in the coming years. This uncertainty in the oil market has led many individuals and businesses to consider alternative options, such as electric vehicles, to save costs and reduce their dependencies on fossil fuels. From environmental concerns to technological advancements and government incentives, various reasons have contributed to the increasing popularity of electric vehicles among customers. While EVs may not be the most affordable types of cars, and they do come with their own limitations, more people are starting to see more of the benefits of owning an electric vehicle. It is important to note that Tesla's expanding global footprint plays a significant role in its projected growth. The company's strategic expansion plans and entry into new markets will pave the way for increased sales and market dominance. As Tesla establishes a stronger presence worldwide, it is expected that there will be a surge in demand for all of its vehicles, which will further fuel its growth trajectory. It is difficult to believe that Tesla's growth strategy looking forward will be much different than what got it to this point. This mainly involves selling more of its cars in its markets, and it can also include new models being introduced. For instance, several people have been waiting for production of the Cybertruck to start, and Tesla has also delivered a small number of its powerful semi-trucks with more interesting models. So far, Tesla cars have been performing incredibly well in their markets. The Model Y has become a top seller in Iceland and Australia, and Tesla aims to make the Model Y the best-selling vehicle in any category worldwide. Recently, Tesla Europe shared that the Model Y broke a 35-year-old record in Iceland. The Tesla model became the best-selling car within the first 6 months of 2023 in Iceland, a location that has been partial to Toyota vehicles over the last few decades. Tesla has shaken Iceland's car market and gained massive support from the locals, thanks to the Model Y and Model 3. The Tesla Model Y and Model 3 have become popular choices for first-time EV buyers, and this may explain why the Tesla brand has become so popular in Iceland and other countries that are just starting their electric vehicle journeys. Tesla's price tag, charge times, intelligent features, and supercharger network all contribute to the brand's popularity. Tesla's target of 20 million vehicles produced per year by 2030 is very ambitious, but is also possible if production cost is lowered significantly. This target is more than a tenfold increase from Tesla's current output, so lower production cost is definitely needed if Tesla intends to perform better than it currently is. As Tesla establishes a stronger presence worldwide and continues to lower cost, it is expected that there will be a huge surge in demand for its vehicles, which will further fuel its growth trajectory. But what do you think? Let us know in the comments, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.